Ever wondered what the APR on your credit card statement means and how it affects your finances? In this video, we'll break down what a credit card APR is, how it works, and why it's important to understand. Whether you're new to credit cards or looking to make smarter financial decisions, this video will help you get a clear understanding of APR. Stay tuned to learn more about how to manage your credit card effectively and avoid costly interest charges. What is a credit card APR? APR stands for annual percentage rate, and it represents the yearly interest rate you'll pay if you carry a balance on your credit card. In simpler terms, it's the cost of borrowing money on your credit card. The APR includes both the interest rate and any other fees or costs associated with the loan, providing a more comprehensive view of the cost of borrowing compared to the interest rate alone. How does APR work? Here's how APR works in the context of credit cards. Interest on balances. If you don't pay off your credit card balance in full each month, the remaining balance will start accruing interest at the APR specified by your credit card issuer. Daily interest calculation. APR is typically divided by 365 to get a daily periodic rate. This daily rate is then applied to your average daily balance, meaning the interest is calculated and added to your balance every day. Multiple APRs. Credit cards can have multiple APRs depending on the type of transaction. For example, there might be different APRs for purchases, balance transfers, and cash advances. It's important to know the APR for each type of transaction you make. Variable versus fixed APR. Some credit cards have a variable APR, which means it can change over time based on an underlying interest rate index, like the prime rate. Other cards may offer a fixed APR, which remains constant, but can still change at the issuer's discretion with notice. Types of credit card APRs. Here are the common types of APRs you might encounter on a credit card. Purchase APR. This is the interest rate applied to any purchases you make with your credit card. If you don't pay off your balance in full by the due date, this APR will be applied to the remaining balance. Balance transfer APR. This APR applies to balances you transfer from another credit card. It can be the same as or different from the purchase APR. Some cards offer a lower introductory balance transfer APR for a limited time. Cash advance APR. This APR applies to cash advances taken from your credit card, such as withdrawing cash from an ATM. Cash advance APRs are usually higher than purchase APRs and start accruing interest immediately without a grace period. Penalty APR. This is a higher APR that may be applied if you miss a payment or violate other terms of your credit card agreement. Penalty APRs can be significantly higher and can remain in effect indefinitely or until you meet specific criteria set by the issuer. Why understanding APR is important. Understanding your credit card APR is crucial for several reasons. Cost of borrowing. Knowing your APR helps you understand the true cost of carrying a balance on your credit card. Higher APRs mean higher interest charges, which can add up quickly if you don't pay off your balance. Comparing offers. When comparing credit card offers, APR is an important factor to consider. A lower APR can save you money if you carry a balance, while a higher APR can cost you more. Debt management. Understanding how APR works can help you make more informed decisions about managing your debt, such as prioritizing payments on higher APR balances or avoiding high-interest transactions like cash advances. Avoiding penalties. Being aware of penalty APRs can motivate you to make timely payments and adhere to your credit card's terms to avoid costly interest rate increases. Conclusion. Credit card APR is a key factor in understanding the cost of borrowing on your credit card. By knowing how it works and the different types of APRs, you can make smarter financial decisions, avoid high interest charges, and better manage your debt. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more tips on managing your credit cards and personal finances. Thanks for watching, and see you in the next video.